Hi there, folks. Sean Broderick from the PDAC. I have a treat for you right now. I'm speaking to John DeCooman. He's the VP of Business Investment and Strategy for Silver Standard Resources. You know this company, and he's going to explain to you what they have coming up next. John, could you please speak to my subscribers?
Absolutely, Sean. Thank you and welcome. Thank you. We're here in Toronto today, and I'll give you a little brief overview of the company, a couple of investment themes, and then I don't know if you do questions, but if there's anything in particular I missed, let me know. But Silver Standard, it's listed in both the U.S. and the Nasdaq, for those of you in the U.S., and on the Toronto Stock Exchange. We've got about a $1.25 billion market cap. Currently, a very healthy balance sheet, and it's one of the three facets to the company that we think is making Silver Standard a very strong investment candidate for you in the resources sector. One, $327 million of cash, where we just put $50 million of cash on the balance sheet in the fourth quarter of this past year.
Very nice, yeah.
Very healthy. Not overly levered. We do have a convertible note of $265 million, but not due for another 3 years in the year 2020. So a fair bit of time in terms of an investment there for the operations. Secondly, we've got 3 operating mines, one in Canada, one in the United States, in Nevada. Those are both gold operations, and one silver mine in Argentina. With that, I'll go through just for a moment a little bit of the size and scale of the company. We have the expectation in 2017 to produce in the neighborhood of 350 plus thousand ounces of gold equivalent at about a $735 gold equivalent cash cost. So it's definitely a healthy cash cost margin, and I think another important facet to that for those of you that are concerned about all-in costs, we have a relatively low capital intensity for 2017. We are exploring, so we've got about $15 million that we're putting mostly into the ground at our operations in both Nevada as well as in Saskatchewan. That's the CB mine that we acquired back in 2016. Importantly, both saw healthy increases in reserves in 2016 at our year end, and both have robust mine lives. So I think certainly we've got good duration there on what some people have been concerned about recently with mining has been the shorter reserve lives and mine life.
And you've really been managing your operations well, so it's really keeping a lid on your costs. That's really good.
Yeah, one of the hallmarks of our company is what we call our operational excellence program, and that's seamless, whether it's from an administrative side, a technical side, even with our exploration. And so in 2016, we saw a lot of exploration success, and to your point, to build on, because we've had a methodical approach, and we like to go into these processes with people that ultimately are going to drive towards reserves and ultimately profits. And with that, we saw increases in reserves at both Marigold and our CB operations. Even CB saw increases in grade, which should lead to better margins in the future. And that's a result of just a methodical expenditure program so that we're able to manage, understand, analyze that data, and make good decisions along the way. And so that's whether we're in our mining operations or whether it's through exploration, we like to take that same approach.
Great. So what things can my subscribers look to happen from your company, say, over the course of the year?
Sure. In 2017, beyond our operating profile, as I'd mentioned before, of about 350,000 ounces of gold equivalent and about $735 cash costs, you should expect us also here in the month of March to make a decision on the Chinchillas joint venture option that we have to extend potentially the operating life of our Perquitas operations in Argentina. And secondly, I think you should also look for continued exploration success. We're putting another $5+ million in each of the 2 operations, a nearly year-on-year similar number. And we believe we have as much prospectivity in 2017 as we had in 2016, so another healthy element to the business there.
Great. That about wraps it up. I just want to give you guys a overview from the horse's mouth, not your horse. They have really done an excellent job of streamlining operations, keeping a lid on costs, expanding resources at the same time, and keeping up their production. They like the higher grade, and you know how I feel about high grade, so that all just clicks together for me. Thanks very much for speaking to my subscribers. Is there anything you'd like to add?
Thank you, Sean. I'd just like to add that if you're looking for protection to the downside with a strong balance sheet, a good operating team, and a lot of exposure to the upside of the metals price because of the scale of our operations, I think you should take a look at Silver Standard.
Okay, great. Thanks
Thank
very
you.
much for tuning in, folks. I'll have more for you from the PDAC.